What's up, guys? Good evening. How are you? Are we live? Are we? We should be live, I think. I think we're live. Let me double check here. Let me see. Are we actually live? I don't know. I'm not sure. Are we? There you go. Yes. Can you guys hear me? There you go. Yep. What's up, guys? Good evening. How are you? What a crazy roller coaster today, right? And what a day we have tomorrow, guys. By the way, Amazon just announced that they are freezing hiding in web services. So Amazon is taking a hit after hours. This might be affecting the futures later on today. So let me say hello to you guys. What's up, Noha? How are you? Doing pretty well, man. I had a very solid trading day today. Very happy. The Elmas and Holmes. What's up, bro? Keep ready. Hello, hello, Lina Mary. Lina Mary is always here when I am live streaming. So welcome back, Lina Mary. I hope you're doing great. LG Jenkins, Renee Majors, Money Making. There you go. What about that name, guys? Money Making. VIP Reef, Era Blake. I hope you guys had a wonderful trading session. And what crazy day we have tomorrow, guys? Is any of you going to gamble on earnings? Maybe any of you is already gambling on earnings with maybe UPS, which is a very heavy report that is coming out tomorrow. So let me make a summary over here about what happened today in the markets. Green day across the board. We had the S&P 500 going up 1.19%. Dow Jones goes up 1.34%. The Nasdaq goes up 0.86%, and the Russell 2000 up 0.35%. You guys know the markets are once again um, in a pivot mood. Yeah, because the Fed is gonna pivot. Either a pivot or a pause is coming up anytime soon. That's what the bulls say. We all know that's bullshit, and the Fed isn't going to make any pivot anytime soon. So you have to be very careful with this rally that we are seeing as of now. Today I closed a bunch of trades. The only to the downside was trade with put options of triple Q. Other than those two puts, I closed trades to the upside. So I am just, trading whatever the markets are doing. I am trading the technicals. But in my opinion, I could be mistaken. This rally is bullshit, guys, because it's not reached from a fundamental standpoint. On top of that, today we got the manufacturing PMI. That's a report that came out at around 10 a.m., if I remember correctly, and the manufacturing PMI fell to 49.9 in October from 52 points in September, which was obviously good news for the bulls because they are looking for bad news, obviously, in order to justify a pivot or a pause of the Federal Reserve when it comes to hiking rates if the economy is slowing down and so forth. So, sorry guys, something. There you go, falling off here. Watch out. Let me see. I have some information for you over here. There you go. So this really was basically fueled by this manufacturing PMI, which came out worse than expected. And other than this report, wow, this week we are going to get the GDP of, or the gross domestic product of Q3. That report is coming out on Thursday. So put that on a sticky note. That is a report that is going to obviously move the markets. The bulls are obviously expecting some sort of negative GDP. What the markets are expecting, or the analysts are expecting, would be a positive GDP around 2.4% for the third quarter of this year versus a negative GDP, or gross domestic product, that we got in the second quarter. So if that would come out showing a surprise, that would be a surprise, a negative GDP. In my opinion, the markets are going to go higher because that implies that the recession thesis is starting to play out. and that might be forcing the Fed to rethink about the interest rate hikes that are going to be carried out or that are going to be announced in the Fed meeting of November and December as well. So that's by far, guys, the most important the most important economic report that we are going to get throughout this week. Crude oil went down today 0.27%. Gold went down 0.16%. The stock pretty much closed flat. It went down 0.02%. And I have told you guys plenty of times about the 10-year Treasury yield. It is obviously a fact of concern, a big factor of concern for the bulls. As you guys can see, TNX or 10-year Treasury yield closed higher today, 0.50% at 4.23%. So as long, guys, as the 10-year Treasury yield remains trading above 4%, any rally that we can get in the markets, regardless of whatever the big stocks report, because throughout this week we have very important earnings reports coming out. Regardless of that, if the 10-year Treasury yield remains above 4%, this rally we are seeing in the markets right now is guilty until proven innocent. So that is something that we need to keep in mind as well. The VIX, the volatility index, went up today 0.54%, but it closed slightly below 30 points. So what is going on over here, guys? We had a green day across the board, but the fear index, the volatility index, the VIX, went up today. So in mechanical terms, we still have an important, let's say, an important portion of the market still holding to its puts, maybe as a hedge. So we can make the case that it is a bit positive, the fact that it's closed below 30 points, but it isn't that positive, the fact that it went up today along with the indices, because we had a green day across the board. If we take a look at the sectors of the market, what happened today? Almost a green day across the board, other than materials and real estate. These two sectors went lower today. Materials went down 0.58%. This might be some sort of recession signaling by the markets. This is a sector that usually gets very negatively affected whenever we deal with a recession. And we had the real estate sector, which happens to be inversely correlated relative to the 10-year Treasury yield, also going lower 0.07%. But other than these two sectors, the other 9 sectors went higher, led by very defensive sectors, guys. So healthcare went up today 1.93%, and also consumer staples. This sector went up today 1.80%. So the markets are in defensive mood. Are the markets waiting for a surprise when it comes to the GDP report that is coming out on Thursday? We are going to find that out on Thursday at 8:30 a.m. Eastern Standard Time. If you take a look at the advancers and decliners, let me see if this. There you go. Let's come in. There you go. So today we had 2,995 stocks going down and 3,499 stocks going higher. So a very positive close, a very positive trading session for the bulls. Let me pull up here the S&P 500. I would have rather, from a bullish standpoint, I would preferred seeing the S&P 500 closing above 3,800. The S&P closed at 3,797 points. However, the bulls easily managed to close above last Friday's high. So this was a very acceptable close for the bulls. But obviously, guys, we had Amazon after hours announcing that they are freezing hiring in web services, and tomorrow at I don't know 7 a.m. 7:30 a.m. we are going to have UPS posting earnings. So that is obviously going to decide where the markets are going to be going to tomorrow. So take a look at the earnings that come out tomorrow, guys. Before open, we have UPS, General Motors, Coca-Cola, Cleveland Cliffs, Halliburton. We have General Electric. We have Valero, 3M, JetBlue. And obviously, guys, after hours, we have Microsoft, Alphabet, Enphase Energy, Visa, Chipotle, Spotify, Texas Instrument and Skechers. In my case, and I'm not a gambler, guys. You guys know that I don't like gambling on earnings. The only play that I am thinking about tomorrow would be selling Enphase Energy puts. The implied volatility is very high, and the stock of this company, let's say that this company has posted very solid reports throughout its last four earnings reports. So I'm thinking that this report might not be the exception to the rule. So if Enphase goes higher, and if I happen to sell puts, I am going to be making good money out of it. So what are you guys thinking about, guys, about these earnings reports? Karen says Ford and gold next week. Um, for next week, you mean? I Sharon. Ford reports on Wednesday. Yeah, they are posting earnings on Wednesday. I don't know if the car manufacturers are gonna post good earnings, guys. Really, your microphone is crackling. Do I have issues with my sound, guys? Sorry about that. If that were the case. Are gonna post good earnings, guys. Really? Yeah. So far, it sounds good. I think. So I think McDonald's beats earnings, says Maersk analyst one. McDonald's posts earnings on Thursday. Correct. So sound is working now. Thanks. Okay. Sorry if there is some sort of inconvenience here and there, guys. Katie Kid, what's up, bro? VIP Reef, you're breaking up, but now my sound sounds better, right? Okay. This is live TV, guys, so stuff happens. Okay. Do you want me to go over any stocks, guys? Uh, I just told you for the most part, the most important information that you guys have to keep in mind throughout this week. Keep in mind that obviously 30% of the S&P 500 is posting earnings this week. So this is going to be a crucial week for the markets. And let me take a look at Amazon because Amazon seems to be taking a hit after hours. Let me see over here, AMZN. Okay, let me see. So they are freezing hiding. And the stock of this company seems to be under pressure after hours. Let me put up here the 1 day, 1 minute chart. Let me see. I don't know how big this division is for Amazon. I mean, it was nothing really crazy. So Amazon dropped. The bulls found support right at the 5 day moving average, and now they are pulling back up. And the bulls are making a test of 118 bucks. But nothing crazy so far in the case of Amazon. The algorithms just reacted very negatively to the news, but the stock is coming back up. Amazon went up today 0.42% and closed the trading session today at $119.82. So nothing crazy over here. So this might not be impacting the futures later on today in a very negative way. So any thoughts on Google earnings? And it's asking me, let me go ahead and take a look at Alphabet. By the way, full disclosure, guys, I own 200 shares of Alphabet. I am a bit under the water. I picked up those shares a few weeks ago, and my average cost is at $103, I think. Let's go ahead and take a look at what Google has been performing like throughout its last four earnings reports. So on its last earnings report, Google went higher a lot, by the way. Then on its second to last earnings report, it went lower. Three reports ago, it also went higher. And four reports ago, it also went higher. So we can make the case that Alphabet has gone up 4 out of 3 of its last earnings reports. So it might be a candidate in order to go higher tomorrow, arguably. And by the way, if we take a look at the weekly chart over here, if Google happens to post earnings tomorrow sitting at the same price that it is sitting um, at as of now, $103, this is going to be the lowest, guys, that Amazon is going to be, or that might be the lowest price that Alphabet is going to be posting earnings at since this crash began. So that is something interesting. As of now, Alphabet is 32% of the highs. And I am not implying that the fact that any given stock is way off the highs. Uh, im- I am not saying that situation implies that the stock of any given company cannot go lower. Maybe the perception of the markets might be a bit more favorable. Maybe let's say that maybe the markets aren't going to be extremely demanding with Alphabet, because if Alphabet happens to post earnings tomorrow, trading at $103, then the stock of this company is going to be 33% of the highs. That's a very acceptable haircut for Alphabet. So Alphabet has done pretty well throughout this year after having posted earnings, and who knows what they are going to be posting tomorrow, guys? Because as you guys know, the ad revenue is going to be the most important metric for Google. And in technical terms, we have a semi-ascending 5-day moving average. The bulls are making a test of the 180 SMA on the 4-hour chart near $103. $103 is a previous resistance back from early October. This is also a previous support back from mid-September. So we can make the case that maybe during the regular trading session, if the bulls can take out $103, maybe they could be, and I gotta say again, maybe they could be potentially filling the next important gap up to 106 bucks, 106 bucks ish. It's a previous support back from early September, and this is also a previous support back from, this is, I said, okay, yeah, back from early July, and this is also a previous support back from mid June. That, by the way, coincides with the 50 DMA or 50-day moving average. This is going to be a very important spot for Google. So if the markets keep on going higher tomorrow, S&P 500, Nasdaq 100, maybe Alphabet has a first shot of filling this gap up to 106 bucks. The RSI, the relative strength index of Google, is at 59 points. Very healthy from a technical standpoint. We can make the case that Alphabet is neither oversold nor overbought. So this could be a potential scenario for tomorrow's trading session, but keep in mind that we are still looking at a primary downtrend. You guys can see how the 200-day moving average is declining, as well as the 100-day moving average. So this is still being a very ugly looking chart. Sellers are still in control, and as soon or as long as we are seeing over here a downward sloping 200-day moving average, the sellers are still in control of the stock of this company. So let's see what happens tomorrow, guys. Anything can happen after an earnings report comes out. So in technical terms, yeah, the short, this is starting to look a bit better, but we have to wait for the earnings report to see what direction Google is going to be picking. If UPS has bad earnings, do you think it will bring down SPY? It could be the case. Gary is asking. So let me go ahead and take a look at UPS. The thing with UPS, guys, is that the stock of this company is considered some sort of gauge of the U.S. economy. If the guidance of UPS is very negative, if the guidance states that there is that according to UPS, a recession is very likely to occur. If according to UPS, the revenue is going to decrease a lot. If they say that the volume of deliveries has dropped significantly and so forth, this might affect the mood of the markets, right? So the commercial guidance is gonna be very important. We also need to take a look at dividend. Are they going to raise dividend? I don't think that is going to be the case this time around. And from a technical standpoint, this chart is absolutely broken. As you guys can see over here, we have a downward slope in 200-day moving average. We can also see a downward slope in 100-day moving average. The 5-day moving average has a semi-ascending position, but yeah, the sellers are in absolute control over here during the regular trading session, and obviously depending on whatever GPS happens to post, we have to keep a close watch on $170. $170 is a previous resistance back from early October. This is also a previous support back from mid-June. If the bulls can take out this area of resistance, they would be potentially being able to fill the next important gap up to 175 bucks. 175 bucks is a previous support back from mid-July. This would imply a profit of how much? This would be a 3% profit, nothing to sneeze at. The RSI of UPS is at 55 points, very healthy from a technical standpoint. And let me take a look, guys, at the expected move for UPS tomorrow. So we're expecting a huge move, guys. $13 to either the upside or the downside. So that's a lot, guys. This is a stock that is going to be going either way higher or way lower. And if it happens to go lower on a very weak guidance, this is very likely to put downwards pressure over the indices. And mind you, guys, whenever you are going to take a trade with either FedEx or UPS, you have to take a look at IYT. This is the transportation ETF. This is a very important component, guys, of the Dow Jones. And this is some sort, in my opinion, guys, this is some sort of market leading indicator that I usually track. So if I have the transportation ETF going lower along with the Russell 2000, that's a bad sign in order to go long the markets in any given trading session. So this is an important fact that you should be putting it down on a sticky note. IYT. No, I as in iPhone, Y as in I don't know, Y as in you guys understand, Y as in I don't know, yellow, and T as in tray. IYT. So these are two indicators that I usually track throughout any given trading session. And as I just told you guys, if I see the transports or the transportation ETF going lower along with the Russell 2000, that's a red light in order to go along the markets. Keep ready. How did you figure out the move on UPS? What tool did you use? I am just taking a look at the options chain, bro, on Thinkorswim. So the expected move let me show you. It's November 18. Let me see. I know this is IYT. My bad, guys. Let me pull up UPS. Let me show you. If you guys use a Thinkorswim, you just need to go to the options chains, guys. October 28th. You guys can see the implied volatility and the expected move. $13.35. Mm-hmm. Correct. I use the IYT and the Russell 2000. Those are my favorite market leading indicators. Correct. So this is gonna be a volatile stock most likely tomorrow. Yeah, really what they post. Um, we have to take a look at the guidance and let's see if they announce some sort of buyback and dividend. Are they going to raise dividend tomorrow? I don't think so, guys. FedEx actually lowered guidance twice a month ago or so. But UPS actually announced that they were about to hire more employees. So this might be some sort of question mark that we have on the table tomorrow for sure. Absolutely. Yeah. Anytime, bro. Absolutely. Yeah. Sure. Got puts on SPY at 380. It will crack before Friday. It could be the case. It could be the case. Let me pull up here the SPY. I got triple Q puts today. Made some good money out of there. And guys, in my opinion, I'm thinking that if the bulls happen to fill this gap up to 388, 50-day moving average, that happens to coincide with a previous support back from early September, I am very likely to be grabbing puts over here unless something unexpected happens. I don't know. Maybe the Fed happens to announce a pivot, which I don't think is going to happen. But in regular or in normal market conditions, I am thinking about loading up and puts near this 50-day moving average at around 389, 388 ish. So that's my plan. In the meantime, I am being very careful with puts. You guys know that the seasonality favors the bull as of now from October 15 and until December 31st. The Bulls are usually in control of the tape. Obviously, we have a long list of concerns on the table. So we have the China situation, we have high inflation, we have the Federal Reserve hiking rates. So we have a bunch of stuff to be worried about, which obviously might not let seasonality play out as it usually does. But I am being very conservative with puts. Let's just put it that way. I am, buying puts and trading them in and out quickly. But from 389, 388, I'm going to be a bit more aggressive with put options, most likely, I'm thinking. Yeah. So I told you guys about Google, thoughts on SPY. 370 before November, considering we are in an overall down. Yeah, we are in an overall downtrend. Absolutely, guys. Take a look at this downward sloping 200-day moving average. In the case of the SPY, we have also a downward sloping 100-day moving average. I was taking a look, guys, by the way, at the market structure of the SPY today, and it looks acceptable. Let me show you. This is another tool. This is a tool that I have showed you guys plenty of times. So take a look at the market structure of the S&P 500 for the most part of the SPY. We have a market structure sentiment of 5 out of 5, which happens to be acceptable, and the demand, as of now, you guys know that this blue shaded region is the demand, is rising, and as of now is above the supply. So this morning, this let me thought that this rally still has legs. I think that this rally could, as I just told you guys, maybe could be potentially being able of filling the gap up to 388, 389. So we are still in a primary downtrend, okay, with a downward sloping 200-day moving average, downward sloping 100-day moving average. So sellers are in control. But from a market structure standpoint, so from a demand and supply standpoint, I think that maybe the bulls, let's see what happens tomorrow, guys. If Google drops a ball and Microsoft drops a ball and UPS drops a ball, then obviously this scenario could be ruled out, right? But I think that if those companies don't drop the ball, we might be seeing 388, 389, maybe by the end of this week, depending also on Meta and Apple and Amazon. But I think that this rally is just another short selling opportunity, guys. Nothing has changed from a fundamental standpoint. We are still dealing with very high inflation. The Fed isn't going to pivot. That's bullshit. Absolutely bullshit. The Fed isn't going to make a pass, at least not in the short term. So, and the Fed guys doesn't want the markets to go higher. That's a problem. Think about it, guys. The stock market, guys, represents for an important amount of people here in the U.S. It represents some sort of wealth indicator. So the higher stocks go, more people are prone to spend money. So this this is not in this is not what the Fed is looking for. The Fed wants the stock market to be as low as possible because that helps to contract the demand for goods and services. That affects the wealth, let's say, feeling for most of Americans out there. So the Fed doesn't want the SPY to go up to 400, 420 points. That's not what the Fed is looking for. So I think that if the markets happen to keep on going way higher on the pivot bullshit and the pause bullshit, the Fed is going to come out and say that they are going to keep on hiking rates in a very aggressive way and stuff. The Fed doesn't want the stock market to go higher. This is simple math, guys. Very simple. So I think that this rally is just another short opportunity, according to my opinion. So there you go. IYT Russell 2000. What price target you will sell your Google shares at? Yeah, I already told you guys. Let me pull up the alphabet chart. And if you guys want me to go over any other stock, please drop a comment and let me know. In the case of Alphabet, yeah, I would be selling out of my shares at 107 bucks. Yeah, as I just told you, 50 DMA, 50-day moving average, coinciding with a previous support back from early September, also coinciding with a previous support back from early July, and also mid-June. So it would be a price target. I own 200 shares, I think, as of now. So yeah, this is my price target. I also, by the way, I got some SPY calls with you guys 2 weeks ago. Those calls expire in January. So I am going to let though I still have a lot of extrinsic value, so I am going to let those puts run up to 380. Sorry, I am going to let those calls run up to 388, 389, and that is going to be my price target in order to close that position unless something unexpected happens, obviously, okay? Can you share thoughts on Nvidia? Sure, I am getting killed on Nvidia, guys. I got lips 2 or 3 weeks ago, and I'm getting killed. But no worries. Those are leaps. So I am not in a rush. Those call options expire in 2025. So I am not in trouble quite yet with those calls that I purchased of Nvidia. Nvidia went up today 1.07% and closed the trading session at what $125.99. So this is a very similar chart relative to Google and Amazon, a primary downtrend below moving averages, downward sloping 200-day moving average, downward sloping 100-day moving average, also downward sloping 50-day moving average. The 5-day moving average is starting to show a semi-ascending position, which happens to be a positive. And as of now, the bulls are dealing with the 180 SMA and the 4-hour chart near $127. They need to take it out and maybe fill the gap, the next important gap up to $134. $134 is a previous resistance back from early October, and this is also a previous resistance back from September 20th. RSI at 59 points, very healthy from a technical standpoint. So if the markets keep on going higher tomorrow, if UPS doesn't drop the ball after having posted earnings, I can see Nvidia filling this gap up to $134. Let me take a look at the market structure of Nvidia. Let me see. I haven't taken a look at the market structure of Nvidia in quite a long time. Let me see, guys. So Nvidia, let me see, 3.6 out of 10. Take a look. And as of now, we have a supply that is way above the demand, but the demand is starting to rise, mind you, guys. So the demand is starting to rise, but yet still the demand is starting to rise, but yet still the supply is way above the demand. So I'm thinking, so I can confirm from a supply and demand standpoint that sellers are in control of Nvidia. So I think that the highest this stock could be potentially going would be $135, which might be a place in order to buy puts. And remember, guys, whenever you are trading AMD or Nvidia or Qualcomm or any other semiconductor stock, you have to keep a close watch on SMH, the semiconductor ETF. This ETF, by the way, has been an absolute tragedy throughout this year. How much is SMH down year to date, guys? I'm curious. Let me put up here 3-year chart. Let me see. So SMH is down how much? Let me see. Wow, 43%. Wow. Year to date. Oh my God. So if you see this ETF going lower, guys, and if you want to go long Nvidia or AMD or Qualcomm or any other semiconductor stock, just don't. Don't do it. So you need to trade any semiconductor stocks tracking the SMH ETF. If it goes higher, then that's a green light in order to go long either Nvidia or AMD, or you guys get the point, okay? Good. Hey bro, what do you think about Amazon? I just went over Michaela about Amazon. So we got bad news supposedly because they are freezing hiring in web services. And let me tell you quickly. But the stock went lower immediately after the news came out, but it is coming back up after hours. Let me see when they want it again. Yeah, it is pretty much at the same spot that it closed the trading session at. So, for our chart, let me see. This is an important spot for Amazon. 119 bucks. 119 bucks is a previous resistance back from October 18, and this is also a previous resistance back from late June. So if the bulls can consolidate slightly above $119, this might be a sign that they are gathering momentum in order to make another push higher and maybe being able to fill the next important gap. This is a very important gap, guys. Up to 126 bucks. 126 bucks is a previous resistance back from late July, and this is also a previous resistance back from early May. That happened to coincide with the 50 DMA or 50-day moving average, as I just told you, near 125 bucks. So the chart is starting to look a bit better. However, take a look. Downward sloping 200-day moving average and also a downward sloping 100-day moving average. So let's say that Amazon consolidates slightly above 119 bucks. Big resistance, or the next big resistance, would be near 121 bucks. 100-day moving average. If the bulls can take it out, then we have this very important gap, as I just told you guys, at around 125, 126 bucks ish. The RSI of Amazon is sitting at 58 points, very healthy from a technical standpoint. Amazon is neither oversold nor overbought. Let's take a look at the market structure of Amazon over here, guys, to see how it's doing. Amazon, okay. I didn't take a look at the market structure when I first went over Amazon. So let me see. 4.4 out of 10 when it comes to the sentiment. And we have a both are rising, guys. The demand and the supply, and as of now, the demand is above the supply. Sorry, the supply is above the demand. Sometimes this is a bit confusing. So the supply is above the demand, and yeah, sellers are in control. So let's see what happens. If any of you wants to buy puts, watch out for this support at around 118, 190 bucks. If that support happens to be taken out with the Nasdaq 100 and the S&P 500 going lower, then we have a gap down to 114 bucks. This would be a beautiful short for Amazon. Okay, Melissa is asking if earnings are good this week. Isn't that bad news as far as the Fed is concerned? That the economy isn't slowing. Thoughts? Yeah, that's a fair assessment, Melissa. Yeah. The thing is that, guys. So um, the interest rate hikes that the Fed is carrying out as of now have a lagging effect. So what the market's already concerned as of now is the fact that maybe later on down the road, the final negative effect of the rate hikes is going to be felt by the economy, and that is going to bring earnings way lower. So if earnings go lower, then we might see a further process of multiple compression that might bring the markets in general terms way lower relative to the levels that we are seeing as of now. So that's a concern. And yeah, that's a fair point, Melissa. The markets are expecting these big tech companies to do okay. So they are waiting for the earnings reports to come out better than feared, which is a sign that that these companies can can deal with a slow let's say that these companies can deal with an economy that is slowing down because of the Fed rate hikes. But yeah, I mean that if the markets want to see things glass half full, that could be a possible scenario. Yeah, the earnings to come out, showing a very poor performance for Microsoft and Apple and Amazon and Meta and so forth, and maybe the Fed would think because of that, like, hey, the economy is really slowing down, so let's uh, let's chill out a bit with the interest rate hike. So that might be a positive reading of the markets. And that could be the case. But guys, the bottom line here is that while the Fed keeps on hiking rates, then the markets are not going to be able to price in the interest rate hikes because, as I just told you, the rate hikes have a lagging effect. So as the Fed keeps on hiking, the markets are going to be like, okay, but now, okay, are you ready? Discounted a let's say an economy that is slowing down, but as long as you keep on hiking, I am going to have to keep on pricing in a further process of slowing of the economy. So this is a tough one, guys. This is going to be a tough one. So I believe that that the only way that we are going to see a bottom, that the only way that we are going to be able to see finally the markets bottoming out is going to be when the Fed says, okay, that's it, I'm done. I'm done hiking rates. So let's stop here. Or maybe if the Fed happens to cut rates, if something happens to break, we have heard a lot of people saying lately that something is going to break because of the strength of the dollar, because the yields because bond yields have been going higher and higher and higher. So that might force a worldwide situation in which something is going to break, either in Europe or maybe here. And if that happens, if the liquidity of the system is in danger, then obviously the Fed is going to either stop hiking rates or maybe the Fed is going to be providing liquidity to the system, to the financial system. That might be a pivot. Obviously, that would be a pause, and that might signal the end of this crash. But as long as the Fed keeps on hiking rates, guys, and as long as inflation keeps on going higher, when you listen to these analysts on CNBC or Bloomberg saying that maybe a pivot is coming and the Fed is going to pause, that's bullshit. That is bullshit. No one has said in the Fed that they are going to pause. So Mary Daly, the president of the Federal Reserve of San Francisco, stated last Friday that they might be. She kind of implied that in the next meeting of the Fed they are going to start to talk about some sort of pause, okay, to let the negative effect of the rate hikes to affect the economy, right? But other than her, no one has said that the Fed is going to pivot. Inflation is going higher. You guys can see how oil prices have gone higher once again, and gas prices are going higher. So we don't have good news. So this pivot and pause stuff is basically bullshit. And by the way, guys, keep in mind this is something that also plays in favor of the bulls. As of now, we have a blackout period for the members of the Fed. So no member of the Fed is going to be speaking publicly until November 2nd, when we are going to have Jerome Powell giving a press conference and addressing the nation to say what the Fed is going to be doing in November and December as well. So that is also something positive for the bulls. So no member of the Fed is going to be speaking until November 2nd, which is the date in which the next Federal Open Market Committee is going to be taking place. Yep. We live in an upside down world right now. Yeah, I mean, yeah. Melissa says, yeah. I mean, your take is very, yeah. That's a very good argument, right? And right now, bad news is obviously good news for the markets, for the bulls, which are desperate, right, after such a horrible year. But at the end of the day, guys, everything depends on the Fed. We might be bottoming out whenever we know for certain that the Fed is going to pause, or that the Fed is going to make a pivot. But until then, no bottom, I think, is going to occur. Can you please take a look at AbbVie and Snap, please? Name, yeah, sure, absolutely. So AbbVie and Snapshot. Okay, let me take a look at AbbVie. AbbVie should have done pretty well today, guys, because the healthcare sector went up today, led the rally. So yeah, AbbVie went up today 2.60%. It closed the trading session at $150.89. In the case of AbbVie, let me draw a line over here. In the case of AbbVie, we have a very important area in technical terms near $150. $150 is a previous resistance back from early June. This is also a previous resistance back from March. So I'm thinking, guys, and take a look at the RSI. It's a bit elevated. This is not a stock that usually trades with its RSI on the 4-hour chart, signaling very high levels. So I would like to see a process of consolidation of VAP slightly above 150 bucks. That might be a sign that the bulls are gathering momentum in order to make another push higher and maybe being able to fill the next important gap up to 155 bucks, which happens to be a previous resistance back from mid-July. If we were able to take this trade from 150 bucks ish up to 154 bucks, this would be a 2.86 profit trade. Oh, that would be a nice trade over there on AbbVie. We can see an ascending 5-day moving average. AbbVie is, as of now, trading above the 200-day moving average, which also happens to be ascending. It is also above the 100-day moving average. This is a sector, guys, that has shown a lot of strength recently. So this might be a trade tomorrow. No doubt about it. If the support of $150 happens to be respected. Let me take a look at the market structure of AbbVie. How is it looking like? Let me see. AbbVie. Let me see. Do I have it available? AbbVie. What's the ticker symbol of AbbVie? No, I don't have it available. I don't have available um every single stock of the market. So let me take a look now at Snapshot. Snapshot is going to run to either the upside or the downside, depending on Meta's report. Or maybe Google could affect Snapshot positively. Snap went up today 7% and it closed the trading session at $8.31. I have a fly over in here, guys. Sorry about that. Okay. So, wow, this is a very ugly looking short, guys. This stock is a no touch until and unless Snap can the bulls of Snap can take out the 100-day moving average near 12 bucks. Very ugly looking short. This is a major downtrend. We can see a downward sloping 200-day moving average, downward sloping 100-day moving average. This is a no touch, guys. No doubt about it. Maybe it can bounce back up tomorrow, depending on the earnings report of Google. That's a possibility, but it isn't worth it, guys. So just stay away from Snapchat. This stock can still go lower. We have a declining 5-day moving average. Snap is as of now below the 50 SMA, 180 SMA on the 4 hour share. It isn't worth it, guys. I would rather wait until buyers step in a, well, let's say, convincing way. So this is a no touch below 12 bucks, in my opinion. Anytime. Okay, guys, I think, well, we are 45 minutes in. That's it, guys. I still need to film a video in Spanish. So thank you very much for joining me. And what a crazy week, guys. Remember, I am going live with Mario. Mario's going to be joining me next Thursday. And that's the day in which Apple is going to be posting earnings along with Meta. So we might be able to go over the earnings report of Apple live with you guys. So that is going to be fun, I guess. So take care. Take high probability trades. Stop. Try to avoid gambling, guys. It isn't worth it, believe me. Um, the people that live in a professional way from trading do not gamble on earnings. So the people that make a living out of this business don't gamble on earnings. Just don't do it. It isn't worth it. You're going to be losing money. If I happen to sell puts of Enphase Energy, as I just told you, that is going to be a whole different story. That's a low risk trade. I am going to be selling options instead of buying. Remember that when a stock is about to post earnings, the implied volatility is very high. So if you are a buyer of options, you're paying a high price. Whereas if you are a seller of options, you benefit from the high implied volatility. So take all of these advices, or keep these advices in mind, and see you guys on Thursday once again live with my friend Mario. So thank you very much. Take care and enjoy the rest of your day. Bye, guys. Take care.